प्लेन और सिंपल वाइट शर्ट को बना दे स्पेशल और फैशनेबल। फॉग सेंट, न्यू फैशन वेयर फॉर मेन।
Thanks for joining us on Power Lunch. This is Bloomberg Quint and I'm Meera Dugal. Let's get to the headlines this afternoon. The Sensex and Nifty trim monthly losses, both indices up close to 0.7% in trade, tracking global markets as well. Sun Pharma is the top loser on the Nifty as investors await clarity from the company on the US FDA's latest observations on the Halol plant. Oriental Bank of Commerce posts its sharpest intraday fall in 2.5 years, despite the lender clarifying that it has already accounted for Simbhaoli Sugars and that it's an old case. And Aster DM Healthcare lists at a discounted price of 82 rupees per share compared to its listing price. All right, let's get to the markets first, and then we'll get you a whole bunch of stories coming up here on Power Lunch. 0.7% up on the Sensex and the Nifty. Neeraj is here with more details. Neeraj.
What a start to the series, Ira. Friday, day one, today, day two, and we've been having a fabulous time for the equity markets at least. We've spoken at length in the morning show about the global factors which want to be assisting this as well. But yeah, just look at the volatility too. That clearly points towards the mood of the market currently. The indices at days highs and volatility at days lows, 13.70. Remember, in the Feb series we had touched levels of 19, so there's a substantial pullback on India VIX as well as CBOE VIX for that matter, to be honest. Today it's a bounce back day for some of the auto and the auto component names. Remember, the last few days, weeks if you will, the auto stocks have been really beaten black and blue. Look at what's happening in today's session. Tata Motors, Maruti, M&M, Eicher too, and the auto component names, Amara Raja, Endurance Tech, Subros, the clutch of names out there which are doing extremely well in the session today. So autos on a fast lane, pharma not so, a bit of a pause. Friday may have been a great day, but today Sun Pharma Advanced Research are taking a bit of a pause. Dr. Reddy's has mildly clawed its way back into the green, but for the most part of the day it was trading with deep cuts, was amongst the top losers on the index as well. So pharma has taken a bit of a pause in the session today. The order win augurs very well for Sterlite Tech. It's no longer up 10%, but still up about 6.5% on very high volumes, which is why I'm highlighting this, about 3% higher at Sterlite Tech. So really good going for this stock. What's been really beaten down, out of shape, two stocks, firstly OBC and Simbhaoli, and I doubt that the clarification that OBC came out with has really had any material difference to the stock price at least. So 11% for OBC, 13% for Simbhaoli, and of course the saga continues, needless to say, but just pointing it out for the benefit of our viewers, as stocks like Gitanjali and Vakrangi continue to go lower. PC Jewelers has been trying to battle its way back into the green, but no such luck for Gitanjali, and Vakrangi, for entirely different reasons of course, is down another 5% in the session today.
All right, Neeraj, thanks so much. That's the markets at lunch. But the one story that continues to have various fallouts is the Punjab National Bank fraud, which had been detected about 10 days back now. Now, one of the things that has been talked about is the transfer of employees at some of these banks following a CVC reminder that all bank employees must be transferred after a mandatory amount of period. In most cases, that's 3 years. Now, this is not new, but it is believed or there is talk in the market that some of this has not been happening as per plan. For instance, in Punjab National Bank case, it appeared that the person who was one of the alleged perpetrators of the fraud had been at his post for a much longer period than 3 years. But is there any truth to talk of these mass transfers? Let me welcome in the IBA CEO, Mr. VG Kannan. Mr. Kannan, thanks so much for taking the time. So my first question to you is there any truth to these reports that there are large-scale transfers happening at public sector banks in cases where this 3-year deadline may not have been adhered to? Banks are now making sure it is.
I don't think that there will be any large-scale transfer because, as you rightly mentioned, this is a existing circular which the government has issued a long time ago, saying that, and it's also a part of the internal policy of most of the banks, saying that no person should remain in the same seat or in the same position for long periods. So in certain cases, it could be 3 years, it could be 4 years or 5 years, basically to ensure that there is no continuity or some sort of a nexus between different people and given an opportunity. I think this is not something new which is happening. And in the regular course also, most people get transferred during the period April to June. So that is something which will always happen. There could be a few cases where people have not been disposing for more than 3 years and 4 years. In most cases, it could be an exemption given, but as a rule, most of the bankers do follow the 3-year rule.
Absolutely, Mr. Kannan, but I think, given what has happened in PNB's case, I guess bank managements, and rightly so, are looking through all the processes being followed. And if it has been found that there have been transfers which have been delayed for one reason or another, and if these transfers are taking place all at the same time, could it have an operational impact, sir? We are also at the year end, so, transfers will tend to shuffle things a bit.
I don't think so any such thing happening. In fact, this yearly transfer is something which is pretty common in the banks, across all banks, especially in the public sector. People can transfer, and the impact is not much. It's pretty smooth and hardly much of a ripple. I think nothing much needs to be added to this.
Okay, so we shouldn't take note of the employee associations also cautioning against some of these transfers, sir?
No, see, employees association may actually look at something vindictive. I don't think there's anything vindictive, and in fact, they are party to the discussions whenever we have these transfers of 3 and 5 years. They are party to the discussion. I don't think they'll oppose to it. They probably are feeling that people who have had less than 3 years and all may be transferred. But I don't think that should be much of a case.
Sure. Mr. Kannan, the other thing that has happened in the last few days is the Reserve Bank of India communicating to banks that they must link the core banking with SWIFT by the end of April, I believe. So any stock taking across the banking sector as to how many still need to do it?
Inevitably, and I can't really give any number because we have not really gone through, but I do understand quite a good number of people have already started. Some of them already have it, and it's not much of an issue. I think they should be in a position to manage this linking, and there is, of course, a period of testing the APIs as and when you have the linkages. So it is a process, and I'm sure they're giving you end of April. It's 2 months. 2 months is a pretty reasonable time. And it doesn't have to be done at each and every branch. The moment it's centrally done, it will flow into the SWIFT system. I think then that should not be much of a problem.
There would be a cost attached to it, though, sir. We believe it's not inexpensive to get this linkage in place.
No, I don't think there will be much of a cost. Cost could be there, of course. I don't think it is so prohibitive cost.
All right. So final issue is, there is again, and this is, from banking sources, we understand that there is a relook at the whole LOU process. Banks at PSP banks are relooking at it. Foreign banks who lend against these LOUs are also relooking at it. So at an industry level, is there an attempt to try and ensure that, the safety of the banking system is not questioned, or the safety of some of these LCs, LOUs issued by the banking system is not questioned?
No, I can tell you one thing is LCs and LOEs, etc., are all genuine instruments. It just so happens that there was probably some gap, which was probably exploited by a couple of people. But these are all, if every LC is going to be looked at that way, then we'll have major issues. And otherwise, the entire trade system in the world will come to a halt. And I don't think so that will be there. But yes, people will be looking at the internal systems to find out if there are any gaps. And that will be something which will be attended to by all the banks. I don't think so. The process is something, the product is anything wrong with the product, but I think the process has to be seen, that's all.
All right, Mr. Kannan, thank you so much for giving us a quick sense of various aspects of this PNB fraud fallout. Mr. Kannan clarifying that he does not know of any mass-scale transfers happening. Certain cases where they had not been happening on schedule may have been relooked at. Also acknowledging that there is a SWIFT linkage which has been now mandated with core banking by the end of April. We reported that on Bloomberg Quint on Friday. And then finally saying that he believes that LCs and LOUs, some of these contingent liability products that are issued by Indian banks, are well respected or well-known products, and nothing new in that. Let's move on, but a quick word from Oriental Bank of Commerce, which has clarified that their exposure to Simbaoli sugars is an exposure in an old case. The stock was down 10% after it emerged that the CBI is looking into this case. But this is an old case. This has already been marked down as an NPA for years, and Oriental Bank has issued a statement on the exchanges as well, saying that this has been marked down, that the first complaint in and this case had been filed way back in 2015, and they have now registered it as per procedure. Markets are going to react negatively to any of these disclosures that come in, but it would be justified for investors to actually look at the legacy of these accounts, some of these bad accounts, whether they are already an NPA, whether the fraud case had already been registered, and now PSU banks are sort of cleaning up their books to ensure that all procedures have been followed or not. The clarification, though, has not had much of an impact on the stock. Oriental Bank still trading about 10% lower. All right, let's move away from banking. India may soon get gas from Mozambique. People in the know have told Bloomberg News that US-based oil and gas company Anadarko Petroleum is looking to sell liquefied natural gas from its block to Indian energy firms. Saket Sundria joins us with the details. Saket, how soon can we expect the deal to be inked?
US-based oil and gas major Anadarko is in India. It is looking for buyers for its LNG from Mozambique. The company, which is developing one of the largest gas discoveries in the world in a decade, is looking for buyers in one of the fastest growing consumers of gas. Anadarko has a 12 million ton LNG project coming up in Mozambique, and it has only managed to tie up about 5.1 million tons of it to buyers in China and Japan and elsewhere. Now, executives from the company are in India. They're talking to BPCL, they're talking to GAIL, Petronet LNG, they're talking to Indian Oil, companies which have plans to set up LNG regasification infrastructure in India. There are almost 9 companies the company has initiated talks with, and they're probably likely to wrap up some deals within the next few months. The company is looking at India because it is one of the fastest growing consumers of gas, and it has plans to set up almost 50 million tons of LNG regas infrastructure over the next few years. Anadarko needs to tie up at least 8.5 million tons of LNG before it can finalize investment decisions in Mozambique. So India actually ends up as a crucial link for its Mozambique plans to develop the LNG infrastructure.
Regulatory woes continue for Dr. Reddy's Laboratories. The pharmaceutical major has received an establishment inspection report for its Srikakulam facility in Andhra Pradesh. The US FDA has maintained the official action indicated status. Darshan Mehta standing by to tell us what this means. Darshan.
So, Ira, this is negative news for Dr. Reddy's because when the inspection happened in the last, when the inspection happened and the last 483 they just had 2 observations, and that was in April 2017. And the street was anticipating an all clear to come in for the plant, but that has not happened. So that will be not taken fairly by the street at this point of time. Apart from it, there is a high chance that this plant may again require a re-inspection. The all-important Copaxone approval is from this plant. They also have some other drugs that they will come out from this plant, so not taken well by the street at this point of time. It's 8 to 9% of the revenues. What are some of the brokerages saying? Credit Suisse is saying that this move is clearly a negative surprise that's come in for Dr. Reddy's. Financial impact will be limited because Copaxone has been delayed by almost 1 year, but this move mellows down the clearance for the other plant, that is Duwada also, so that is negative, and the resolution may not be as immediate as the market is factoring in. So negative news coming in for Dr. Reddy's.
Darshan, thanks for that. Staying with the pharma space, pricing pressure in the US will continue for 2 more years. That's the word coming in from Lupin's managing director Nilesh Gupta. Speaking to Bloomberg Quince, Ridhima Saxena, Gupta said that margins for the company will see a meaningful improvement only after 2 years of pain. Listen in.
Both levothyroxine and Renex are meant for FY19 launches, so they are meant for in the next 12 months. Axiron, we already have product in market, so we all just have to get market share and we'll start shipping the product out.
Also, considering there have been some warning letters issued at the Goa Indore facilities, do you see any problems in some of the product launches happening because of that?
Yeah. So not in these ones that we've talked about, because these come from other locations or we already have final approvals for as well. But obviously when you have a warning letter, there are products that are stuck at these sites. Thankfully, none of them were date certain opportunities or very large opportunities, but we still want to deal with this warning letter as efficiently as possible.
So what would then be your strategy for the products that are stuck because of the investigations happening in the Indore and Goa facilities? What would be your strategy there to move those products either to some other facility, or how would that really work?
So I think selectively we're looking where we're doing very material changes to look at moving some of those products perhaps to other locations. But I think for the most part, I think the quickest resolution is going to resolve the warning letter at these sites as well. And I think we will have a speedy resolution.
Also, how do you see the pricing pressure in the US in the next fiscal, especially with your metformin franchisee that has done well, but there has been some pricing pressure there as well. So how do you see the pricing pressure continuing in the US for the next fiscal?
Sure. So, first of all, I think, like I said, price pressures are here to stay. Products like the Glumetza and Fortomet, a good part of those products have already gone through significant erosion. So they're meaningful products, but they're by no means the biggest products that we market. So there's a lot more, and we're clearly looking at what next.
Also, considering all these factors are there, and like you said that the pricing pressure is likely to continue, how do you then see your margins growing, or which has been a concern for most pharma companies in India, in the US markets? How do you kind of strategize there then?
So I think the next 2 years is going to be pain. I think we're already looking at a point where we have lowered margins, and I think I think they'll improve over time. But I think meaningful improvement will come only after 2 years, where the complex generic portfolio, more of the specialty business happens.
So how do you then see, you've already indicated that you may trim some of your R&D spends because of the US market scenario. So by how much do you see that getting trimmed to, and in the next fiscal then what would be the percentage of R&D spends that you'd look at?
So we basically guided to staying flat on an absolute terms in terms of last year, and I think that's what will continue as far as R&D, and we believe that we will be chasing all the meaningful opportunities that we have in that.
Also, talking about the India business, how do you see the business mix changing in India, considering we saw a decline in the Glutamizza generic? So how do you see the business changing in India, especially in terms of the products?
So India obviously is a very meaningful part of the company. It's the second largest part of the company. The US has come down, so naturally, obviously, India has gone up as a percentage of the total pie. But I think India is still about 25% of our total revenues, and I think there's still a long way to go. The US is the biggest market, the biggest generic market, so it is going to be the biggest market that we have. But we would obviously want to keep growing disproportionately in India, so that becomes a relatively bigger portion of the pie.
All right. Kochi-based healthcare services provider Aster DM Healthcare listed at a 7% discount to its issue price. The initial public offering was subscribed 1.3 times when the issue finally closed. Bloomberg Quint caught up with the chairman earlier today, who said that he's not concerned about the immediate price movement and assured investors that he's confident of growth of about 20 to 25% going forward.
We expect anywhere between 20 to 25% growth as we go forward jointly from GCC and India, and we hope that this will definitely translate into profit. As I was telling you, we generally has been growing both top line and bottom line if you look at a little back, and so we hope that the business is poised for a good growth, both GCC and India, and we have now this plan of having about 30 to 35% of business being from India, and with the National Health Protection Scheme that has kicked in, that must even be much brighter in India. So we were thinking that this will be 30 to 35%, and that should also do well. These 5 hospitals are likely to come in over a period of 5 years in India as well as in GCC. So as earlier I told, the overall growth projection, see, this is a small portion of our overall hospital or overall revenues, and whatever growth prospects which we see, this will be part of that. So it takes time for hospitals to kick in and produce a significant revenue. But we already have many hospitals in pipeline which are in the ramping up stage. So together, whatever earlier I mentioned, we should be seeing that top line growth. There are 2 things. One, if you look at the EBITDA margins, the hospitals and clinics are actually more profitable, whereas the pharmacies are having a low EBITDA. But when you look at the return on capital employed, it will be actually better in pharmacies because the capex is much lower.
All right, just giving you a sense of news just coming in from the Delhi High Court. The Delhi High Court has issued attachment orders on all assets of RHC Holdings and Oscar Investments, who, if I'm not wrong, are 2 of the promoter group companies for Fortis, which were submitted by the 2 in an affidavit in court. So essentially, they had submitted a list of their assets, which is both RHC Holdings and Oscar Investments, and the Delhi High Court has issued an attachment order for all of those assets. We don't have the list of those assets assets because they were submitted in a closed envelope to the Delhi High Court. But our correspondent Arpan from Delhi is reporting that the High Court has restrained RHC Holding from even using their bank accounts except for the payment of salaries and statutory dues. Arpan is with us on the phone line. Arpan, can you give us the details on what the court said?
That's right, Hira. So all this happened in the during the hearing of the execution plea, which has been filed by Daiichi as far as the arbitration order was concerned. And they said that the first step towards execution is that the assets are attached of the judgment debtor, which is the one who is supposed to pay. And of course, after that, the Delhi High Court has issued an attachment order. Now, the assets basically were submitted. A list of assets was submitted earlier, sometime around March last year, and the Delhi High Court has said that whatever the assets have been given in that list have to be attached. And also both the companies have been asked to, since that list had encumbered as well as unencumbered assets, now they will also have to give the details of the unencumbered assets, because those assets will be the ones which will be attached, and that list has to be given within a week to the Delhi High Court by these two companies.
There is one list already submitted in a closed envelope, you said, Arpan?
Yes. So there was a list submitted earlier, but that has encumbered as well as unencumbered assets, and the attachment can only happen against the unencumbered assets.
Absolutely.
So they have to just clarify within a week and give to the court the list of their all unencumbered assets.
Okay, and bank accounts, just to reiterate, can only be used for payment of salaries and statutory dues.
Yes, all the dues that they have to pay as per the direction of the law or the court orders or whatever, the statutory dues, as well as payment of salaries of the employees. Apart from that, there's an attachment order, and that is well.
All right, Arpan, thanks so much for breaking that news for us. That's Arpan Chaturvedi reporting on the High Court's order on RHC Holdings and also Oscar Investments, two of the key promoter group firms of Malvinder Singh and Shivinder Singh. We'll get you more details on that. Let's move on. There's a new kid on the block. Construction company HG Infra Engineering is headed to the primary markets. The 462 crore IPO will open today. Samit Sarkar is standing by with a snapshot of the company's business and its public offers. Samit, over to you.
So this is the 6th IPO of 2018, and the company is now looking to raise close to 462 crore rupees at a price band of 263 to 270. And at the upper end of the price band, that is 270, the company is valued at close to 1,760 crore rupees. Now the IPO is a combination of offer for sale and a fresh issue. Now, 4 promoters are selling shares worth 162 crore rupees, while the company is raising close to 300 crore rupees to repay its debt and to buy some capital equipments and for general corporate purpose. Now, HG Infra is a road construction company, and it also has a small exposure to water pipeline projects. Now, the company generates most of its revenue from public sector clients. In FY15, it got around 54% of its revenue from public sector companies, which increased to 73% in FY17, and as of first half of financial year 2018, it stood at 66%. Now, its clients include NHAI, PWD, MES, and Jaipur Development Authority. Now, if you see, the company is majorly into building roads and highways. It generates more than 85% of its revenue by building roads and highways in the first half of financial year 2018. Now, the company is present in states like Rajasthan, Uttar Pradesh, Haryana, Maharashtra, Arunachal Pradesh, but it gets most of its orders from the state of Rajasthan. In FY15, 38% of its total order book was from the state of Rajasthan, which now increased to 45%. Now, as of November 2017, the total order book is close to 3,700 crore rupees, of which 45% is from the state of Rajasthan.
Samit, how do the company's financials stack up, and how do they compare to peers?
So if you compare it with Dilip Buildcon and KNR Construction, the growth rate of the company is good. Now, if you see, the revenue, net profit and EBITDA has grown at a CAGR of 34%, 37% and 28% over FY13 to FY17, which is better when compared to Dilip Buildcon and KNR Constructions. But on the balance sheet side, if you see, the book value of the company is the lowest, and the total debt to equity is the highest at 1.7 times. Now, this will come down to 1.2 times post-listing, as the company is using the IPO proceeds to repay its debt. On the return ratio side, the return ratios are very impressive. The return on equity on an annualized basis for FY18 stands at around 25%, return on capital employed at 30%, and return on asset at close to 7%. On the valuation side, if you see, on price to earnings on FY18 annualized basis, it is a bit expensive at 30 times, but on EV to EBITDA, it is at par with its peers. Now, that FY18 EV to EBITDA for HG Infra is 12.5 times, while that of Dilip Buildcon is 13 times, and KNR Construction is close to 12 times. Lastly, on brokerages, now Angel Broking has a neutral rating on this IPO because of limited track record and concentrated order book, but the other two, that is ICICI Direct and IIFL, have a subscribe rating on the back of the strong growth prospects that the company has. Now, we also spoke to the management of HG Infra, so let's hear into what the company has to say.
As of now, it seems like that we are having about 45% of the project in Rajasthan and 48% in Maharashtra. But you could see in the years past, we have executed various projects in UP, Uttarakhand, Haryana, and say Arunachal. So that is not a constraint within the boundaries. We are not having that. Prominently, we are looking at say various states as well: Punjab, Himachal, Gujarat, MP, and many more states. There is no boundaries to it. As far as our internal working operations, we could see that the owning of key equipments within the company would be rather better, and instead of hiring those, because you all be depending upon the hired equipments. And then other part is increase in the operations. We can have the leverage, we can deploy our own resources, and that way extended working hours can be worked out. So you could see the margins, of course, would be just because of that we are not having the dependence on the hired vehicles or hired equipments.
All right, we'll slip into a quick break. Coming up on the other side, it's more power to Xi Jinping of China, whose term could actually indefinitely extend due to a repealing of a presidential term limit. We'll get you the details.
कुछ इसी तरह बच्चों के साथ साथ बढ़ते हैं LIC के चिल्ड्रंस प्लान्स, जो दे आकर्षक भुगतान बच्चों की हर बढ़ती अवस्था में। बढ़ो 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 मेरे संग।
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Welcome back. You're watching Power Lunch. Let's dip back into the headlines at the half-hour. Sensex and Nifty trim monthly losses, both indices trading more than 0.7% higher, tracking global markets. This week, global markets will eye Jerome Powell's testimony to Congress, the first from the new Fed chief. The Chinese Communist Party is set to repeal presidential term limits, paving the way for Xi Jinping to stay in power, perhaps indefinitely. Also, Samsung launches its answer to the iPhone X. The new flagship handset is up in the market, called S9. All right, let's take a look at the markets. Agam Vakil is joining us with the key movers in trade today. Agam.
Well, it has been a good day of trade because we've seen the Nifty move back about the mark of 10,500, and these are cues which we've seen build over Friday, and this is an extension of what we've seen last Friday. So, but when it comes to turnovers, at least in the cash market, they're average, very much in line with the average of the previous 7 days. But in the F&O, of course, slightly lower than what we see in in terms of average of the previous 7 days, at little less than 2.6 lakh crore rupees. That said, the broader markets again are moving in line with the benchmark indices. We're starting off with the mid cap as well as the small cap indices, both of them advancing by a little over 0.8%. Of course, the small cap index up as much as nearly 1% right now. It's the IT index which is taking a little bit of a hit. In fact, is looking at a little bit of profit taking. This is after we've seen a lot of strength come in over the last 3 or 4 sessions. On the other hand, realty index has picked up quite substantially. In fact, the most gains coming in terms in the sectoral indices, and of course the auto index also seeing gains. And in the Nifty gainers, we have IOC and Tata Motors. On the losing end, we're looking at some amount of weakness in Sun Pharma, but that's not as substantial. On the whole, it's a good day of trade for those who are long in the markets right now, Veera.
All right, Agam, thanks so much for that. The global currency and bond markets, dare I say, global markets broadly, will be watching the new Fed chair, Jerome Powell, and his report to the Congress this week. The U.S. Federal Reserve has already released 55 pages of his testimony. Bloomberg News' Kathleen Hayes reports on the key takeaways from that phase of the report.
It does have a lot of interesting stuff to say. I mean, first of all, you do get the sense, of course, that the Powell-led Fed, at least at the start, is very much going to follow the path that Janet Yellen set. Growth is picking up, inflation is expected to rise, and so they are supposed to have gradual rate increases. In fact, further rate increases. We heard that in the policy statement and the Fed minutes. So what we're also figuring is that Congress then is going to focus on this question of, does further mean faster? In other words, are you going to hike rates not just 3 times, but 4? Let's jump into dots go on your Bloomberg, because we can see how the Fed came out of 2017 going into 2018 with its consensus for 3 hikes. So now the question is, after we've heard from some Fed officials like John Williams, president of the San Francisco Fed on Friday, saying 3 or 4 hikes, will Jay Powell give us a signal that he's on board with that kind of thinking as well? Also, what we learned in this monetary policy report so far is that the Fed sees the economy just near or a little above full employment, labor markets getting tighter, but they don't seem too concerned about it, even pending labor shortages. Let's look at what they said in the policy statement just about that, because what they seem to be saying is that although employers report having more difficulties finding qualified workers, hiring continues apace, and serious labor shortage would have brought about larger wage increases than have been evident to date. So they don't seem too concerned about wage inflation rising quickly, really getting inflation out of control. So Tuesday, February 26th, that's the first day of Powell's testimony, House Financial Services Committee. Then on Thursday, U.S., that's February 29th, he'll testify to the Senate Banking Committee.
Right. IG's chief market strategist Chris Weston does not expect Jerome Powell to rock the boat. In a conversation with Bloomberg News earlier today, he said he expects a very nuanced statement this time around, especially since markets that are listening in are at a sensitive point.
Well, I mean, it's very much going to be a nuanced statement, in my opinion. I think the idea that we're going to get a new chairman coming in and giving us something that's going to rock the boat, given that he's seen how sensitive markets are to various rhetoric, the steepening in the back end, the rise in real rates that we've been seeing across the curve, and obviously we saw the big drawdown in risk sentiment in late January into February. So, I think he's going to be fairly keen to not rock the boat again and come out with a fairly optimistic but nuanced nuanced statement. So I'm very keen to see the reaction in, certainly in the interest rate market, where on Friday we saw the difference between euro-dollar December 2018, December 2020, come down about 3 or 4 basis points. So I think, keeping an eye on the rates market, but, how optimistic is he? How much of his own view is he giving in this statement as well?
Sure, given the eco data that we have seen, perhaps he could be leaning more on the hawkish side, but you're saying he's not going to do much to rock the boat just yet. It's interesting. I saw this opinion piece on the Financial Times from Rana Baruha, which is an editor there. 3 questions for Jay Powell that she had. The third one in particular caught my attention. If you could bring that up real quick for our audience to see. She says it's possible that we could find ourselves in an environment in which stocks, bonds, and the dollar would go down all at once, which we certainly have seen that before, Chris. Her question to Mr. Powell would be, which one would he choose to support? Where will, if any, the Powell put be, Chris?
Well, I mean, I think first of all, I think the idea that, he's been very focused on I think he'd be very focused on the 5-year break-even levels. I think, the Fed run their own model on that, but that's sitting around 2.19 at the moment, and that's been tracking oil prices. So, I think the reaction in the dollar is going to be a very key one there. So I think he's going to be, keen to not cause huge gyrations in the US dollar. And I think obviously that's going to be a function of what happens in the curve as well. I think, we go into this week expecting, and I think it's become a fairly consensus trade here to look for flatteners between 2s and 30s at the moment, around that 91 basis points as an entry level. And I think, while the market is very short the front end, and they're progressively more short the back end of the curve as well in the Treasury complex, I think there's an opportunity here to apply those flatteners. And I think, if he can move the dial a little bit, and perhaps I think at the most optimistic level for people who are short the front end is the idea that he will lay the foundation for that March meeting and really get us a sense that they're potentially going to continue with 3 rate hikes this year. But there is the opportunity, should the data continue to improve and inflationary expectations probably move back up into above 220 and firmly onwards, then we could have 4. So I see him as an opportunity to be nuanced in this meeting, but potentially lay the foundations for 4 rate hikes this year should the data continue to improve.
And Chris, all that guesswork about whether it's 3 rate hikes, 4 rate hikes, when, and everything behind that has resulted in the chart that we showed earlier in the hour, G#BTV9668, which just shows you the price action that we've seen over the last several weeks, just how big of a differential there is between the intraday high and the intraday low on the S&P. And in this chart, Chris, which I'm sure you're quite familiar with, it just shows you how flat it was, or how tight that range was beforehand. So given this big spike, which we might say, is this an anomaly, or is this just sort of the new normal now in the markets? Is there anything that Jay Powell can say, though, that might bring that price differential down, that might bring that volatility down?
Well, I think the idea of allowing the economy to overheat, and the market feels from the tone of his voice that they're going to continue to be somewhat behind the curve, and they're going to allow the economy to achieve escape velocity and overheat in that environment will probably be supportive of equity prices. I mean, the VIX has come down to 16.5%. There's an opportunity if he gives you those calming words, optimistic yet allowing them to be behind the curve, and we don't see a move in that longer-term euro-dollar futures complex that I spoke about there being at 41 basis points, then I think volatility vols, implied vols in the S&P can come down perhaps to 13, perhaps down to 12% by the end of the week, and then we can see that gradual climb on again. But if he does give us a realistic sensation that in that March meeting is going to be a platform to potentially get 4 hikes, then I think implied vols stay somewhere around 16 to 18%, perhaps even pushing up to 20% in that environment. So I think for me, as I keep talking about rate structures and yield curve flattening and bits and pieces, I really want to have a look at, as I say, the euro-dollar futures and what's priced in between December 2018 December 2020, because at the moment they've only got 41 basis points priced in. If that ramps up again, then I think vols could push up a little bit higher here.
Right, of course, Fed speak will dominate commentary over the week. But what else is moving Asian markets and what are markets watching? Let's welcome in Richard Harris, Chief Executive at Port Shelter Investment Management. He's joining us on the phone line from Hong Kong. Richard, good morning. Thanks so much for joining us. Is it all about the Fed this week, or are there other data points that you think will impact trade? Noting that we've had a good day of trade on Friday in the US and a good start to the week here in Asia as well.
Yes, well, we are all looking to see what Governor Powell will do, or Chairman Powell will do. But I think one of the issues is that it looks as if he's pretty much very much the same. Obviously Donald Trump didn't want Janet Yellen keeping in the same place, so he chose Jerome Powell, but it looks as if he's going to be very much the same. But I think the markets will be looking out to see if they can get anything from his character. Is he a hawk, is he a dove, or more hawkish or less dovish than we've seen previously. So I think that's going to be the main talking point. But I think it's probably too early to say that we're going to see much of a change in policy. The market's been looking at maybe 3 rises. I think that's still more likely than 4, because I think the Fed has basically funked it. They've failed to raise at times when they should. So I suspect they'll still stay conservative.
Richard, we've seen a bit of calming off in terms of, yields, the pace at which yields were increasing. What is your own sense of whether you are going to move higher on the U.S. yields, whether it's 3% or, whatever number people are watching now? Is that something that's going to be inevitable, and perhaps, interim you may see periods of calm?
It is inevitable. The yields will move up. We are much more likely to see wage inflation coming in, and inflation isn't just something that creeps up. It very often tends to smack you from behind, and that's also going to bring volatility to the markets. I don't think it'll be lasting volatility, but clearly, inflation will move up. Therefore, interest rates will move up. But I don't see it at the moment being critical, and I think the Fed will keep a very close eye on to make sure that there is sufficient liquidity, that they're not accelerating too fast, just to make sure that liquidity doesn't dry up. So I'm not terribly worried about that. What I'm looking for more in the shorter term, and I'm looking from, say, April onwards, so not immediately short, is that there is a lot of bull reasons in the market out there. Growth in Europe is good. Growth in the US is good. China's picking up. Now with a new, stronger leader in China, of course, the market's doing quite well today. Markets like strong leaders. So there are plenty of bull reasons out there. So we can talk about the negative reasons. We are worried about the big crash out there, but it's not going to happen yet. It's not going to happen this year.
So you remain constructive then on equities in the emerging market, emerging Asia universe as well, Richard?
Yeah, and partly because this stage of the cycle, people tend to be fairly well invested in the more traditional stuff. We may see some money coming out of bonds, which is a possibility, but it doesn't take much of an allocation from Western markets, deep Western markets, into shallow emerging markets to make emerging markets start to go. And that's why at this stage of the cycle you do see a rotation going into the emerging markets. You do see emerging market currencies do quite well. And I think that trend will be followed. These are long burn trends. We're in the sort of the latter third of the cycle, so they should be seen in the cyclical sense. But I think overall that's the kind of trend we're likely to see.
Richard, over in India, though, the month of February has been a month of outflows from equities. I don't know whether that's an India-specific thing, because I know we've had a couple of issues that have come up, including a long-term capital gains. Any view on India, Richard?
Well, I think we've seen outflows go in markets generally. The markets did have a bit of a scare in early February. They needed a bit of a scare. They needed to consolidate. When that happens, there's a flood of money that heads for the door. I think that's perfectly natural to see. But equally so, we all know that these fund flows can change on a penny, and or on a rupee, I should say, and turn overnight. So I don't see that as necessarily a negative indicator. I think we need to see the underlying fundamentals worsen much more before, at least on a 9-month view, we get particularly worried.
All right, Richard, always a pleasure to speak to you. Thanks so much for joining us with that quick take on global markets. Speaking of India, one of the things on the macro side that everyone is watching is the implementation of the e-way bill. Over the weekend, it was announced that starting 1st of April, interstate movement of goods worth 50,000 or more will need e-way bills. That was the takeaway from the meeting held on Saturday. E-way bills for movement of goods within a state, however, will be adopted in a phased manner. It will start with 4 or 5 states initially, said Sushil Modi, who heads the group of ministers overseeing the GST technology framework. The proposal on intrastate e-way bills will be tabled on the 10th of March meeting for final approval. Modi added that about 9.5 lakh taxpayers have registered on the e-way bill portal, and around 6.5 lakh e-way bills are generated daily as a part of the trial runs. What was missing, on the other hand, was a simpler return filing framework. The committee could not decide on whether provisional input tax credit should be given to taxpayers or a credit should be given once the tax is paid by them, Modi said. Now, we spoke a little bit earlier today to Kerala Finance Minister Thomas Isaac, who said in very strong words it's a mess out there when it comes to the implementation of the e-way bill. He criticized the government for rolling this out on a national level without making sure that the IT backbone was in place. Listen into what he had to say.
No, the system is entirely ready. The last meeting, before we decided the e-way will be made mandatory, it was assured that everything was ready. But on the day after the introduction, the e-way bill system had to be withdrawn. For a simple reason, there was no server capacity. Now, this is ridiculous. You cannot have this national level rolling out of a new tax system without the IT backbone, server capacity, and so on. I do not know what's happening. There's no way, for example, my state government can examine the returns, see where the leakage is taking place, where IGST, books brought from outside are really recorded and so on. Really, it's a mess here.
Is suggesting that you're still not confident. Was there any sort of presentation made by the guys who manage the IT backbone, something that would suggest that April 1st is a reasonable deadline to begin with, sir?
There was a subcommittee meeting 2 days back, but I couldn't attend because my party conference was going on. But see, in fact, I do remember many ministers want assurance that it should not be like the last time that so said everything was ready. So assurance was sought and assurance was given, but everything hung up the day after the introduction of the e-way bill. And what I learned is that there is no server capacity sufficient to transact the entire business in India. No, this is very strange. I don't know what's happening.
Mr. Isaac, one of the things that they've said is that they'll start with interstate and then intrastate will happen in a phased manner. Is that something that you all were on board with? Do you think that will ease out the pressure on the system?
We are very keen that e-way will be introduced, but checks posts are no more there. Therefore, the only way to keep track of interstate movement of goods into the state is to have the e-way bill. Therefore, we are all very keen, but there's no way you can upload the entire e-way bill. So it has been withdrawn the day after the introduction.
So what do you think, Mr. Isaac, will, your people in your state, industry, what are they saying? They're willing to try it, I guess, another time to see if it works better this time around? Or, I guess that's the only option.
Every genuine trader who is paying tax is suffering. In fact, they are all, some of the major companies have complained to us. They cannot, they find it difficult to compete in the market with traders who don't pay tax. Therefore, there is a major problem, much more serious than you think. But I really hope that things are sorted out the earliest. Now it's not just a question of EVA bill. Now, 8 months into the new system, we are still debating about what should be the proper return form. Now, that sounds very, very strange. 8 months have passed, and now we are yet to finalize, or we are revising the return form for the GST.
Critical comments there coming in from Thomas Isaac. From domestic politics to global politics, in a move that will allow Xi Jinping to rule almost indefinitely, China has repealed presidential term limits. Bloomberg News' China correspondent Tom McKenzie joins us for more. Tom, this confers a lot more power on the president than he already has.
Well, it certainly reinforces the idea that's been around for some time, of course, that President Xi is determined to extend his term beyond his second term, beyond the end of 2022. And in terms of the power that he has the confidence to be able to effectively put a final nail in the coffin of collective leadership, a system that was set up along with the transition system under Deng Xiaoping in the late 1970s to try to ensure that China didn't go through the kind of chaotic leadership that it did under Mao Zedong, when, of course, so much power was concentrated in it's one man's hands. The fact that we're now moving squarely away from that indicates the power that President Xi has towards a centralized system of governance, closer to a one-man rule system here in China. Of course, he's already the head of the military. He's already head of the party. That's the most powerful position. And the change to this term limit around the presidency allows him to have this triumvirate, this triangular or trio of leadership stakes, or holdership stakes, I should say, that allows him to push through his agenda. Really, there wasn't a great deal of surprise from China watchers that this announcement came, but it was surprise really around the timing of the announcement, the fact that he was able to do this so early on in the second term of his presidency. Of course, it had been flagged originally at the party congress back in October, when there were no obvious nominees to take over from President Xi at the end of his second term.
Tom, as you said, there is some surprise on the timing of this. Any indication as to why it would have happened now?
Well, certainly the state media is saying that there's a need for stability, for continuity, particularly as they say China moves towards its ambitions of becoming a moderately prosperous society between 2022 and 2035. The one state newspaper suggesting or hinting that President Xi may stay on until 2035 as a result of that need for stability and continuity. But of course, we're going to get a clearer indication of some of the personnel appointments that are going to be happening over the next few days and weeks here in China. We've got the Central Committee, around 200 senior members of the party meeting in Beijing over the next 3 days, where we're likely to see new heads of the PBOC, the central bank, of course, and also the regulators of the banking and insurance sectors, as well as an oversight body looking at the financial risks here in China. We're expecting those nominations likely to be announced at the National People's Congress that starts on Monday, March the 5th. And of course, that's going to go on for about 10 days. It is this annual, essentially parliamentary meeting that will rubber stamp some of these announcements, and that's when we'll get slightly more clarity on who President Xi and his team are going to be appointing to some of these key leadership positions and where we go forward, particularly in terms of tackling financial risks.
All right, Tom McKenzie, thank you for giving us the details on that legislation change in China. Into the tech universe, Samsung has launched its answer to the iPhone 10, the flagship handset called the S9. Bloomberg's Stephen Engel tells us whether this launch will be a game changer for Samsung.
Well, it's a really similar form factor to the S8, so there's not a lot of change there. There's more performance under the hood and a much better camera. They have augmented reality emojis. They have stereo speakers, a number of different steps. But the big question here, is it a game changer? Well, perhaps not, but they do need to roll out something after Apple, of course, came out with the 10, which was a bit of a game changer for them, their first major change in quite a while for Apple. So they needed to keep pace there. The one thing that maybe Samsung has going for it, it is cheaper, as much as $200 cheaper for the cheaper S9 on T-Mobile, about $930 for the larger S9 Plus on Verizon, so $720 for the S9 normal on T-Mobile, $999 starting price for the iPhone 10. So, you know, it's a critical launch for Samsung because they're now another step beyond beyond that Note 7 fiasco, that exploding handsets, the mini phablets, of course, in 2016, and also, of course, the J.Y. Lee scandal that recently had a more positive outcome with his release from jail, but still a black mark on the company.
That's a wrap on this edition of Power Lunch. Thanks for watching. Countdown is up next.